following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. I'm in the sunny Philippines tonight that is, and we're having a little bit of technical difficulties right now, so I'm going to need a couple of minutes here, and then we're going to be right on the air. So if you guys can hang tight, I appreciate it. Okay, I think we're sharing our screens now properly at a new setup here this morning. Hope you guys are doing well in the den. It's good to be back finally at a desk. It was, 40 hours on airplanes or airports on the linkages over here. If you haven't tried that sometime, feel free to. It's a good wake-up call that it's okay to stay home sometimes and not travel. So it's, coming over here every time, it gives me a really good perspective on what's going on a lot of times in the U.S. and, what we sometimes have to complain about and don't have to complain about. And it's, to be honest with you, it's a refreshing break to not have every news station focused on Trump or Hillary. So that's the good news. Let's take a look at some usual suspects out there. I hope you guys are seeing my screens now. Can somebody in the den give me a heads up here? Make sure we're seeing the screens, if you guys are seeing the screens in the den. Cool. All right. Thank you. All right. So want to hit a couple of usual suspects. As usual, we've been away for a while, and want to take a look at gold first. And here's some of the charts on gold. There's not a lot really to talk about here other than we try to find places to buy this particular instrument on support or breakouts. Here's the long term on the December contract. There's no question about it. A lot of the algorithms that we look at and use for our own trading, we look at things relative to profiles on a long term and then try to continue to drill down. Here's our ultra long term that we always look at on the weekly to try to get a bearing. And my charts are slow here, excuse me. Try to get a bearing on what's going on with the long term, and then we usually kind of shift down into the daily and then the 240. Well, this has been a little nerve-wracking, I'll be honest with you, around this 1347.48. But the good news is, whatever the market does, this thing seems to be holding up like the Rock of Gibraltar, and it's not a bad place to make a stance when it comes to gold on the long side. And if you guys are just waiting for the next leg up and you've met some targets around that 1366.67 in the past and waiting for the next breakout, that's just what you have to do. That 1366.67 is going to be the long-term breakout on the weekly. So what am I doing personally with this thing? I'm trying to give it a little bit of noise factor around 1347.48. If that doesn't work, I'm really looking at the kind of back the truck up area of 1295, 1296. So again, stepping back and looking at this particular product, possibly with a long hedge on, as we've been looking at the euro, and we're going to get into that in a little bit, and how that's worked out or not worked out, is not really, the worst thing in the world is a lot of times to sit back and just kind of, let the trade do what it's going to do and keep the hedge on. And that's one of the things that we're going to look at again with the euro. If you look at the 10-year, this has been kind of the darling trade out there. And again, using the same principle as gold, we're in an uptrend. We've got top of the profiles here on the daily, bottom of the profiles around 132, 131, 31. Those really haven't changed no matter what the market has done. And that's always a comforting feeling to look at the notes and the bonds and feel like you've got something to lean on in most instances. Here's the S&Ps. I think the day I left, let's see. I think we're around here when we closed on all-time highs, and then we've had to, a little bit of a pullback here. But again, when you kind of step back and look at it, we're just consolidating around all-time highs. Breadth has been pretty positive when it comes to looking at the scanner and some of the details of the scanner. Here's the daily again, just kind of taking a snapshot and then able to drill down a little farther. The 240s gave you a little bit of a break here, but again, I think you got to take a look at the long-term view on this particular product. And also, we've talked a lot about looking at the notes as the easier trade to try to deal with instead of trying to short the S&Ps or even go long the S&Ps at the highs here. And that's been something that's been a pretty interesting trade. Let's take a look at November beans. We finally plowed through. Let me wait for this to come up here. Finally plowed through that 995 area or 999.50 area that we talked about. We had the close above. We've kind of come back and rattled around. And again, we're just trying to hit a couple of the usual suspects this morning and catch up. Let me see here. Sorry about that. 999.50 is that unfair high. Closed above it. And now we're rattling around above that particular area. But the bigger number that we talked about on the weekly was this 1015, 1016 area as kind of that long-term weekly. No matter what the daily is, this weekly is going to take precedence. And we reached a high this week of 1017. That's 1016 rounded off, and then we backed off a little bit. So, what do you do with this kind of being above those daily unfair highs and below the weekly unfair lows? It's kind of a situation where you want this product to get away from these particular inflection points and go one way or the other, and that really hasn't happened. So, forced me to make a trade here. I like beans on the short side, even though we're looking kind of rosy above that daily, understanding that this weekly trumps that situation, being able to put shorts on and put stops above this 1015 to 1016 area. I like the way this thing is acted on the long-term weekly. It was a great trade to us on the way up, kind of following that concept. As soon as we broke, we've got the retracement back into that particular inflection point, and you got to take it for what it's worth, no matter what the fundamental news is out there. All right. I think we've got a caller. Robert from Buffalo, are you there?
Yes, I'm here, John. Good morning.
How are you?
Yes, John, I spoke to you last November. I'm a blind person up here in Buffalo, and you just went over the S&P.
Okay.
You kept saying, well, here's the 240, here's the daily, and I don't know. You didn't mention any numbers. Could you mention some numbers?
Yes, sir, I will. And we've got to go to break. Can I talk about that when we come back?
Yeah.
Okay, great, Robert.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Transmitting from the Philippines office here today. And Robert, are you still with us?
Yes, I am, John. I'm here.
Thanks for staying with us.
Yes, John.
It's been a little bit of a trying morning for me. Technically, I'm technically challenged anyway, so we're trying to get things.
No, you're not. Yeah.
I think so. I was telling Larry the other day, Robert, and we'll get to your S&Ps in just a second. But it's amazing what we take for granted over there. In the States a lot of times, and when I come over here, one of the things that hits me directly in the face amongst quite a few things is the committed bandwidth that we have to pay for here to use the internet and really have that kind of secured, and probably the people listening to this show don't believe this, but to get a 4 meg committed leased line all the time up, no variations in the DSL service, blah blah blah. Cost me $600 to get 4 meg of bandwidth, which always never ceases to shock me. At this one particular area of the office that we used to transmit from. Well, Robert, I listened to what you were saying, and I understand. I remember when you called last November, and I do have a bad habit of kind of walking through things quickly.
Yeah,
and
I'm trying to pay attention and learn a little bit here, but I don't know.
Yeah.
I missed the numbers. I don't know what you're talking about. Then I'm lost. So.
Well, I will definitely keep that on my radar screen from here on out.
I really appreciate that. And by the way,
I think everybody can benefit from that. Go ahead. Yep.
Is there a Ralph's over there?
Not yet, but they're thinking about opening up franchises over here.
Okay, well, stay away.
Yeah, I will. That's a good one. But they're talking about pork and maybe not even in a joking manner. North Carolina has some awesome barbecue, and I'm sure a lot of states out there, like New York, has probably a great version of barbecue up there. And it doesn't.
No, we have a few places, but not many at all. No.
Okay. Well, a lot of different places. I mean, in South Carolina, they have a different style of doing things. Texas, North Carolina, Arkansas, Kansas City, the whole 9 yards.
Yeah, right. They're noted for that. Yeah.
Yeah, but you know what? I never thought I'd say this, but in being from the South and having access to different styles of pork barbecue in North Carolina and the western part of the state, the eastern part, I tell you what, the pork here, I never thought I'd say this, is better than back home, the way they do it here.
Yeah.
It is.
They probably have different restrictions on how they grow their animals, right? But they feed them.
There's in this particular area, and this is kind of I would consider it a kind of low to mid-tier city, and therefore there's not a lot of institutionalized type ways that they're doing things, growing, animals like you're talking about, or just doing any type of thing on a mass scale, or they kind of do everything locally, which is cool. Yeah, they have small kind of pockets of farmers, and therefore I think the what you say about the way they raise the animals is probably on a relatively smaller scale and probably more organic type style. But the way that they have a certain sauce here. It's called Inasal, Inasal, and it's pretty daggone outstanding. Well, Robert, let's go back to the S&Ps really quick. Now that we've gotten completely off the beaten path here, I've got up a chart, and we just kind of hit the S&Ps not too deeply a while ago, but I've got a chart up, and I'm going to make a conscious effort to slow down. John from Philadelphia has gotten on me a lot about that, and I need to hear that at times, trust me. So I'm glad you brought this up, but I don't talk about this a lot, but our 60-minute breath chart, we had a little bit of a pullback in the S&Ps the other day on the 15th. And, a lot of people will use our scanner and use this 60-minute rollover in breadth. And what I mean by that is, when the amount of stocks trading below the 60-minute profiles eclipses the amount of stocks trading above the 60-minute profiles. I know you're blind and you can't see what I'm talking about, but this is something that we really don't talk about a lot on a short-term basis because, the show is an hour a day and, people are trying to utilize, in my opinion, they can only utilize information that we give, a little bit more on a longer-term type setup schedule. And that's why I really stay away from the shorter term. I never really pull up any 60-minute charts is what I'm trying to tell you, because it just doesn't really apply too far down the road. So this is something that I really like to use if I'm short-term trading S&P futures. It's been a really good thing to pick battles with. And if you use this on the short term relative to some of the longer term profiles that I talk about, which always take precedence, those inflection points, then I think you've got a pretty good formula. And I've done a couple of videos on things like this, and you might have listened to those videos. I'm not sure, but they're I think they're on some of TFNN's websites. But what I'm noticing right now, just to get a little bit deeper in the S&Ps, is I'm noticing that, we have been getting a little bit heavy on our daily breadth calculations. And that means that, the number of stocks trading above the daily profiles on the S&P 500 stocks is still above the aggregate amount of stocks that are trading below profiles, therefore emitting this, positive number. But that being said, as it kind of looks relatively heavy, and the fact that we're gapping down a little bit this morning in the S&Ps, about, I don't know if I can call that a gap down. What are we down, 3 or 4 points? I think we're down 250 this morning, guys, on the September contract. So the market's trying to open down. I mean, that's pretty much a noise area, but the market's trying to open down a little bit. The breadth on that, on the daily calculations is approaching negative, but the major inflection points that we've only got to pay attention to right now on the daily, Robert, because there's nothing on the weekly. I mean, we're in the ionosphere up there on the weekly, but on the daily, you've got 2183.50. And I'm going to blow this up so people can see this, but I'm going to kind of talk everybody through it at the same time. Okay, so can you hang on? Because I think everybody would really like to hear a little bit deeper on this. Okay, cool. Guys, we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we've still got Robert with us from Buffalo. Robert, you still there?
Yes, you do.
Great,
Here.
great. So, and Robert is not able to see my screens. He's blind. And one of the things that, I think is really important here is the ability to kind of, understand where these inflection points are, especially for someone like Robert, and then also kind of walk through, where's the edge? and that edge is based on, what we basically have the tools that we can, kind of deduce things with. And also, is the market really, in this case, is the market really poised for a downturn? And, are you kind of, if you've been shorting this thing, there's been very rare occurrences, Robert, as you know, over the past 6 or 7 years when we've had like something to really take advantage of on the short side, and none of them have really been long-term occurrences, if you know what I mean. So, one of the things that we always look for is, how do we get an edge around the inflection points? And these inflection points on the daily, we've got not a wide profile on an average sense, and that means that, we don't, in our automated systems, Robert, I have so much to say right now. I'm sorry I'm jumping around. But in our automated systems that we use, a lot of times when we take an average of the last, whatever, so-and-so profiles, looking back over time, especially on the daily profiles. And we say, is this a relatively wide profile or a relatively thin profile? And then, what does the automated system do relevant to that particular style of profile that's offered? Well, this particular profile, even though it's wider than the previous profile, on an average sense, it's not exactly that wide. So, we've got a span from 2149.50 down below on the dailies up to 2083.50. So that's not that wide of a profile in the S&Ps, especially with the lofty levels that the S&Ps are at now. And if you look at that on a percentage basis and look at it on an average kind of relative to other profiles basis, it's not that wide. So the automated systems will say, if we've got a really wide profile, maybe we want to put more leverage and more edge around trading within the balanced area. So let's say, we're coming up into 2183, Robert, from below, and we've got a wide profile, then we would put more weight against weighing out, okay, let's look at our, breadth calculations to give us that tie to the marketplace kind of momentum feel. And then let's also look at this wide profile, and let's look at possibly a short opportunity around 2183.50, but that's really not the case right now. All right, you do have, in my opinion, some edge starting to show with the daily aggregate profile calculations here on our scanner. When we look at it, it says 7.96. When we open, it might actually start rolling to negative, and that really hasn't happened in a while. That hasn't actually even remotely happened since I think we were in negative territory around the 2nd or 3rd of August, and that wasn't a long-term, back the truck up situation there. So, do we deserve and can we explore the entire fair auction down to 2149, 2150, which is the bottom of the daily profiles? Okay, so another thing to look at here before we answer that question is we go to our weekly and we say, there really hasn't been a hint of a new profile appearing here on our weekly. That means that there's kind of, this par for the course. The long-term edge is really telling you, let's try to block out the short side. And this is going to answer the question, I think. Let's try to block out the short side and only take longs after this breakout above 2101, 2105. That happened back, 1st of July. So the profiles help me, for the most part, not try to, outthink things and just say, the long-term view is positive. We don't have a lot of hints going on right now of a big turnaround. Can we have retracements in that long-term view north? Absolutely. And a lot of times, it would really, really help to see some kind of aggregate disturbance at the bare minimum of the daily breadth not really jiving with our weekly breadth at the bare minimum, then saying, it might be okay for an intermediate trade against this 2183.50. And, and let's just follow the action here. We were up 4 days ago. We had closed above a new, this profile. We backed off. We came back and retested it this morning and hit a high of 2183 rounded off. And now we've backed off to 2177 off of that inflection point, 2183.50. So, you know, is there some opportunity here to kind of try to trade this down farther? Yeah, but, you know, if you're looking at it from, you know, we talked about this with gold running up into 1366, 67. You know, that was the weekly unfair highs. I mean, where's the edge? Is the edge to, you know, to really get short gold right now, or just wait for more long opportunities, which would be more supportive action in gold? I kind of feel the same way about the S&Ps here. I think that, you know, a lot of the edge, believe it or not, is to still try to be, you know, buying support on this thing. For guys who are out there who are a little bit more daring, they can put stops, you know, above that 2183.50 area. And we also have, drilling down to our 240s, Robert, we have a 240 profile where the unfair high on the 240 profile now, which is edged down for the first time in a while, is 2182.50. So you do have some resistance around 2182.50, 2183.50, but, you know, I'm not a huge fan of getting short in any way other than kind of more of a very short-term trade until we start having some more metrics start weighing in our favor on the long-term things that we look at. And I just don't see that right now.
Well, I understand everything you said, I hope, and I really appreciate this, John. It's just great.
I think it was great that you called, and I'm always looking for somebody to give comments on, and you know, I'm taking these as constructive comments that, you know, we can all learn from, and I appreciate you calling.
Yeah, I'm sure there's other people in my situation also. You know, I'm sure there are.
I would bet my life that they are. I mean, you know, this is a great call, and thank you very much, Robert.
Thank you very much, John.
Okay, thanks.
Bye now.
Bye. All righty. Let's see. Okay. All right, let's hit a couple other things, and then we're going to hit some stocks in just a second here. And let me pull up our currency board. And I think we're going to break in 2 seconds here, so we're going to get into the currencies in just a little bit, folks. After this break, we'll hit the euro, which is not going exactly how I wanted it to go, but no harm done. The yen, Aussie dollar, and the Canadian dollar and the British pound. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And do we have Alex from Brooklyn, New York on with us?
It's Eric from Brooklyn.
Eric, how are you?
Yeah. Hi, John. I'm doing great. Just starting my day.
Great.
I'm seeing if the whole Janet Yellen rally is going to hold.
Yeah. That's what's on your mind?
NVIDIA. It's a part of the semiconductor space. It's had a hell of a run this year, and I'm convinced that it's too high, too fast, too soon. I don't know if that makes sense, but normally when I see rallies like that, they're gonna, as quick as they go up is pretty much as quick as they're gonna go down. If you could pull up a chart, and draw a upper channel starting from 2001's high, and connect it to the recent high. Is this run done?
Okay. What I'll say about this is
I'm using the monthly time frame.
Right. You're obviously looking at this as a much more longer term play than maybe some of the folks out there who are trying to time their trades a little sooner. You're looking for kind of like, is this thing really just off the charts, over with, and can you make some money on the short side here?
Yeah, that's exactly what I'm considering.
I'll tell you this. I've personally gotten into some trouble before trying to pick tops or bottoms on things, and I think Larry's probably listened to this show today. He probably can tell you some horror stories himself about trying to think that some things are too high or too low, and you really just don't know when those things give out of gas. Like take for instance. Larry says he's definitely not listening. He's blocking this conversation out. Okay, so let me back up for a second. So one of the things that, just like when we looked at the S&Ps a while ago, and we talked about them for a while actually, just general trading 101 kind of do's and don'ts for me are, the profiles really keep me from doing really wacky things that maybe I used to do. And Steve Rhodes and I talk about this a lot. And I listen to Steve's show all the time. He talks about blocking out one side of the marketplace. I try to do the same thing. Is it okay to be long, not okay to be short, okay to be short, not okay to be long? Now, there's definitely some some money to be printed for sure on these things that just go parabolically up. I mean, they ultimately do end, nastily, like on the downside. But you can get taken out in a body bag trying to figure out where those things can turn around or will turn around. And if you look back in time on NVIDIA, just back to, wow, where it really started kind of getting some legs here back in 2015 August. We broke profiles. We've only had kind of rare occurrences where it was trading below these long-term weekly profiles. And even with yesterday's action, I still don't even see a hint of a new balanced area trying to appear here. So the first thing that I would say is, you really don't have a lot of things to lean on here. And the other bad news, in my opinion, is for taking that attitude right now, is you've had a daily profile appear below price action yesterday, even with that pullback. And that usually is relatively bullish from just a sheer percentage when that happens. And, is that good for a stock or bad for a stock? So
yeah,
you really have support right now at 59.96. And people that watch this show a lot will tell you that, when these types of setups happen and you've got a stock in an uptrend in this instance, you just got to kind of blindly almost, just turn the rents the same way of the nonsensical trend that, doesn't seem to really have a lot of sense to it. Like it's just, this horse has been out of the barn forever, but, it is what it is. I mean, trying to overthink these things, I mean, let's look at the rate situation. Do I think it's ridiculous? Without question. Like, I feel so sorry for Rick Santelli when I get a chance to watch CNBC's. I mean, it's a sad situation. You've got a very smart guy who I respect a lot, that I used to speak to a lot when I was in Chicago, and he's been like, what the heck is going on, for a long time. And then I think he's slowly just started, converting to like, what, it is what it is. Let's try not to make too much sense of it. And the trade is still in force on the long side, and when it breaks, and then we'll be smarter to wait until that happens, then start looking at it from the other side. And I really think that logic really can come into play, when you talk about NVIDIA and trying to short it here. Again, I mean, these things can be, listen, I've been there. I mean, okay, it's gone too high, let's short it. Okay, it's gone a little bit higher, let's average. And they use that lovely term on the tube a lot, the dollar cost averaging. If you liked it here, you got to really love it here. That kind of deal.
Yeah,
that concept in 2008 put people out of the ball game. And it's, you never know when that's going to happen. But NVIDIA could, it could keep going north here, and you really don't have any, in my opinion. I mean, maybe Basil can look at this, or Larry, or some other folks, and give you a little bit better traction on it. But when the simple things that I look at, and I look at some things that try to keep it black and white, block out one side of the marketplace, I don't see any really reasons to get happy about this from the short side yet. It's really not technically, in my book, had a lot of breakdowns. And let somebody else pick the high print. Those are the people that really are not going to be in this game a long time. So that's my opinion on it. So to be extremely long-winded about it.
Some more downside.
Yeah, I mean, I'd at least like to see some technical breakdowns. It's not going to, it's not going to be the worst thing in the world to not get the high print here.
Yeah.
So, and again, these things. Sometimes I talk about mental capital. Sometimes when you have to devote a lot of mental capital to a trade, it wears you out, and you can't put mental capital towards other types of things that you got on the screen.
Yeah.
And when you got a real wacky, crazy thing like this one going on, and there's some money to be made with these things. Don't get me wrong. There's a lot of money to be made with it, and probably some part of your portfolio could be devoted to it. But a lot of times these things get out of hand, and then they're very disturbing. Like if NVIDIA goes up to 80, and let's just say the current, let's say our currency gets devalued. You know what I mean? Like, there's all kinds of things that could happen. Things would have to reprice themselves higher. I mean, there's all kinds of things that could happen that could make this thing go up. And I don't see any technical reasons right now for it to. I mean, you got much better things to short. Put it that way.
Yeah, I'm considering your Netflix idea that you said earlier this week, and I really like that.
Okay. Well, I tell you what. Thanks for calling in, and we'll take a look at Netflix again.
Thanks for the help, John. Best of luck.
Yep. Thanks, Eric. Bye. Okay, bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Got one more small segment left, and had some really good phone calls today. Robert from Buffalo and Eric from Brooklyn. And that call from Robert, I think, was, it's always a good wake-up. I have a bad habit of trying to cover too many things before the opening here for you guys, because I know that, I'm trying to myself get a grasp a lot of times with, the instruments that I cover kind of pre-market, excluding the stocks, are just, those are the things you got to try to put the relativity things together, in my opinion, out there with the, what's the market looking at with the crude situation, the S&Ps, the golds, the euros, and So I go a little fast sometimes, and I'll try to slow down. I think it's a good thing. All right, so let's take a look at, we got the lightning round here now. We got 3 minutes left. The Aussie dollar ran into some problems here, 77.46.47 up top. That was the target-rich environment. Talked about waiting patiently, maybe leaving a couple of contracts on just to kind of understand what direction that this thing needs to, continue to plow through in. The euro, I've had the hedge on with this one, so this is not as painful as it might seem, but that's the way I've talked about trading it. I ultimately thought we'd get down to this 109 and lower area, but again, the hedge is kind of the insurance plan on that one, and I'm not trying to day trade this one. The Brexit situation. All right, so had to get back above the 130.19 area to start thinking about this from the long side again. That's coupled with 130.82. So those are those kind of weekly unfair lows and daily unfair lows and unfair highs from a previous profile. Got them throwing things together again here, folks. But the bottom line is that 130.19 and the 130.82 neighborhood had to be kind of that. Let's wait for some conviction and for some confirmation to get back in the water on the long side. Again, that's happened. You had a pretty piercing move above those levels this morning. We're trading 131.49 as of right now. So again, the good news is I think you can block out the short side if you have something like this happen, because you pretty much crossed some borders here that are pretty important. The yen trade. All right, so the yen obviously pierced the par area and is now rattled back above, and that's what we talked about waiting for with this one. These unfair lows on our long-term weekly are at 124.25, that general area. We pierced it this week. We come back above. We talked about it doing a little bit of a flush to get some folks out of that. Is it time to back the truck up and get long the yen right now with impending possible innovative new government intervention on the horizon? I think you got to have a weekly close now above that 124.25 area, and today's Thursday, so that's the way I'm looking at it. Sorry about that one. All right, let's go back and look at crude. If you've been in a cave somewhere, you're waking up short. This is not a pleasant situation. So we got back above 43.33. That was the trading area on the short side here. And after breaking through that area, you kind of got to, block out the short side for a while. But guess what? The good news is you got a weekly profile this week. This is a strong trade right now. 47.53 unfair highs on the weekly. We've already hit 47.30. We've gotten to that neighborhood. Let's play defense above that 47.53 area for a little bit of a trade on the short side. Nice, strong long-term inflection point. Stay tuned for Larry, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.